Because you're a shareholder. How do you feel this morning?
Well, we're very happy. This has been a long time coming, pardon the pun. Time Warner spun off AOL, Time Warner Cable, Time Inc. publishing business. We're left with the entertainment business, and that's what's getting sold this morning for what's a pretty good price.
So you're very happy because there was like a 36% premium over where Time Warner was trading before this all started. How would you feel if you were an AT&T shareholder?
I'd probably be less enthusiastic. Listen, I think there's a strategic rationale for this business, for this acquisition. The issue I have is with the price and with the risk of taking on this very large enterprise.
Well, let's talk about the price versus where we're trading currently. If you bring up the pre-market, we're 28 minutes away from the cash open. We trade in the pre-market at $88.16 on Time Warner stock. Why?
Well, the price is being set by the arbitrageurs, and the arbitrageurs are looking at two things. The time to close is going to take over a year, they hope, and the probability of close. And listen, over the weekend we saw lots of figures in Washington lining up against this deal. The probability here is probably not much better than 70%, but I think it will close.
So, David, the arbs don't like it very much. Are they wrong?
Well, I think it kind of goes with all of the political uncertainty that's out there, right? I'm sure this is going to end up banging around the Department of Justice for quite a while, as you said. I mean, a year is maybe even optimistic, unfortunately, given how long a lot of these legal wranglings take. But you know, it seems like both sides of the political spectrum came out somewhat negative toward this over the course of the weekend. So I think it does feed the kind of anti-establishment, anti-Wall Street, anti-big corporate rhetoric that's been out there dominating our election now for the better part of a year.
So, Chris, why are you so confident the deal's going to get done?
Well, there really shouldn't be issues here. First of all, it largely depends on whether the FCC gets a crack at this, and that's unclear at this point. The FCC would probably take a more aggressive stance than the Department of Justice. It's a vertical merger. There really shouldn't be anti-competitive issues that can't be addressed with some kind of consent decree, much as we saw in the Comcast-NBC deal. So, you know, listen, I think it's going to be a tough road, but ultimately with conditions, this will get done.
Yeah, this is an important point, David, that everyone may not understand. Antitrust division is really charged with enforcing the antitrust laws. Is it anti-competitive or not? FCC is a much broader standard of, is it in the public interest?
Yes.
And that allows everyone to come in and have a point of view.
Right. I think that's exactly right. And your point on the FCC is important. For me, I think that the DOJ is just it's a much stronger hand, and it's a much more complicated hand if it gets involved in that, and it has been.
They're very professional. They're going to judge us on its merits. They're not going to be swayed, I don't think, too much by the political rhetoric.
What does this say about the regulators currently, though? So this morning over in Europe, we had the EU step up and say ChemChina and Syngenta have not come forward with concessions early enough. We're going to have a look at things as they evolve. Monsanto's got an offer $128 on the table. The stock right now, as it closed Friday, 102.07 cents. We're nowhere near on that deal either. No. Why is this happening globally, it seems, in a big, big way?
Well, listen, I think there's a general push against bigness. Bigness is viewed as a sin, and it's hard to overcome that in this situation.
So talking about bigness being a sin,
yeah.
But the rhetoric also after the AT&T-Time Warner deal was who's going to be next? Where does that leave Disney? Where does that leave Fox? So they have to have a tie-up. Where do you see that rhetoric going? Well,
listen, you know, Disney's a $150 billion equity cap company. There's probably only one potential acquirer for Disney, and that's Apple, which may or may not be still looking at the Time Warner deal. But I think you're going to see further consolidation in the content arena. We've been talking about this for years. But they're going to be smaller deals. You're talking about what John Malone calls the free radicals. AMC, Scripps, Discovery. You know, you've got basically after this deal, assuming it goes through, you've got four kingdoms. Comcast-NBC, Telephone, Time Warner, Fox, and Disney. And everything else is going to get turned around, including CBS Viacom, which is in the midst of its own merger, which, or potential merger, which shouldn't face any scrutiny.